Good day, ladies and gentlemen. In this video I'll be teaching you the Elliott wave trading system. Okay, so you'll get to learn the Elliott wave trading system. So if Elliott wave is something that's been kind of sophisticated for you before, it's gonna be easy after this video. Okay, so I'm gonna make it very easy. Now, what is the Elliott wave? The Elliott wave is simply a wave that plays out on the charts anytime you have a trend in markets. Okay, so anytime you have a trend in markets, that's when this wave plays out. So it's either the market is trending in the upward direction, giving you higher highs and higher lows, or the market is trending in the downward direction, giving you lower highs and lower lows. Okay, so basically the major Elliott wave has 5 waves in it. Okay, so there are 5 waves, 5 major waves, and out of those 5 waves, 3 of the waves are impulsive waves. Okay, 3 of the waves are impulsive, while 2 okay while 2 of the waves are corrective. Okay, so this is what makes up the major Elliott wave moves. Okay, so if you're in an uptrend, what you're going to see is you see an impulsive move. Okay, then you have a little correction like this, then you have another impulsive move. Most times the third wave is usually the biggest. Okay, the third wave is usually the biggest wave most of the time. Then you have the fourth wave and then the fifth wave. Okay, so this is wave number 1, which is impulsive wave. This is wave number 2, which is corrective. Wave number 3, which is impulsive. Wave number 4, which is corrective, and lastly wave number 5, which is impulsive. Now there are a couple rules that you need to pay attention to when it comes to this particular Elliott wave. The first move is the first rule rather. Rule number 1 when it comes to the Elliott wave is that this second move must not retrace up to 100% of the first move. Okay, so on no account should this retracement get to the level of the beginning of your first move. If it does, then what you have is not a strong trend. So you don't continue counting the Elliott wave if this second one retraces up to 100% of this first one. It can retrace up to 90%, but not 100. Once it gets to 100, the Elliott wave series is already cancelled out. Okay, so it can retrace a bit and then push. Something else you need to know is that this fourth move must not retrace up to the level of this first move. All right, so this is where the first move ended. If you place an horizontal line right here, this fourth move that is coming down must not get there. Okay, so that's the second rule you need to pay attention to. Okay, so anytime any of the rule has been violated, then what you have is no longer an Elliott wave. Okay, so the third one also should not be the smallest. Okay, so this third move, most times, like I said, is usually the biggest move, but if it turns out to be the smallest move, then you don't have an Elliott wave. It does not necessarily need to be the biggest move, but it shouldn't be the smallest either. Okay, but most of the time you will find that this third move is usually the biggest move. Some other time it could be the fifth move that will be the biggest move, followed by the third move. Okay, so in a nutshell, the third move should always be bigger than the first move. Okay, so once you have that, excuse me, once you have that figured out, then you are good to go. So I'm going to go to the live chat. I'll give you an example for uptrend. I'll also give you an example for downtrend. Excuse me. So let's go over to the live chat. Okay. Okay, so now I'm on Euro USD chart. Okay, this is the Euro USD chart right here, and I have some. I'll be moving over to let's see. Okay, so right here, I'll start from. Let me start from here. Let me start from here. Okay, I can see a nice wave right here, so let me just use this one. All right, so what do you have right here? You can see market was moving in the downwards direction before, giving you lower low, lower high, then failed to put in a lower low, then pushed up to break structure. That shows you that the beginning of a trend has kicked off. Okay, so since the beginning of a trend has kicked off, and I told you that the first move is your first wave in the Elliott wave, I'll just use um, a slanting line to depict the first push. Okay, so from this point to this point is going to be my first move. Okay, which is an impulsive move which broke structure. All right, now that's my first move. So my second move, let me copy this. Okay, this is my first move. I'm trying to copy in order to get my second move. Okay, so my second move will be from here to here, which is that correction in the downward direction. Okay, so my third move will be an impulsive move, which I said is usually a bigger move, but it shouldn't be the smallest move in the arrangement. Okay, so that's my third move. You can see how impulsive it was. Then my fourth move is going to be a correction move. I'm trying to copy this. Okay, so this is my fourth move right there, which is the correction move you see there. And then lastly, I have my fifth move, which is this right here. So this is a perfect Elliott wave pattern. Okay, so what do you see happening? First move, this guy right here. Then second move is correction, third move impulsive, fourth move corrective move, and fifth move also an impulsive move. So something else you need to know, let me quickly point it out, is after the first five moves, impulsive, corrective, impulsive, corrective, impulsive, you always have an ABC movement that retraces back the fifth move. So you're gonna have a move coming down, which is your A, and a retracement, which is your B, and then finally you have another impulsive move, which is your C. So there's always an ABC correction after the fifth move is complete. Okay, so that's something else you need to pay attention to. Now, understanding this will give you an idea of where you are in a trend. Have you ever come to the chart and you see a trending market, but you don't know exactly whether you should enter because you don't know how far the market is going to go? So what the Elliott wave helps you to understand is when you come to the market, you can just check where did this trend start. Then you can start counting. Okay, you start counting to know whether you are still in the second move, or you're in the third move, or you're in the fourth move. So understanding where you are will give you more confidence to frame an entry position. Okay, so you frame an entry idea which you can use to join the market, and you also know or have an idea of how far the market could possibly go based on where the market currently is in the Elliott wave cycle. Okay, so that's what this helps you to do. So assuming you came to the chart and you saw this first move, we just broke structure, and you see this correction coming in, you know that definitely your third move is certain. Okay, so when the correction comes in and did not retrace below or up to 100% of this first move, it just retraced a bit, maybe to 60% or 70%, and then it starts showing you some bullish candles. You can then enter, place your stop loss below how far price went, then you ride the wave knowing that there will still be other waves in the upwards direction. Okay, the fourth wave is still going to come in, the fifth wave will also come in. Okay, so that's just what the Elliott wave helps you to do. Okay, so this is the uptrend example, and you can see the ABC pattern after the fifth move. You can see the ABC pattern. um, Look at this. This is your A pattern coming down, retracing this fifth move. Then you have your B, which is a retracement in the other direction. Then you have your C. Okay, so that ABC most of the time usually come in to complete the Elliott wave cycle. Okay, so basically that's just what the Elliott wave is about. I'm trying to look for a downtrend example. Okay, so I have a downtrend example right here. So let's kick off with the downtrend example. I can see a break of structure in the downwards direction. So this whole move from here to here is going to be my move 1. Okay, that will be my move 1 in the Elliott wave. Then I have a retracement right there, which is my move 2, which is a correction move. Okay, so this is my move 2 right here. From here to here is my move 2. Then the move 3 is going to be the next one right now. So let's see. Okay, let me get my, so this is my move 3 right here. Okay, so what will my move 4 be? Let's see. My move 4 will be this correction right here, and then I have the move 5 right here. Okay, this is my 5th move. So price went beyond the 5th move, putting on another push before giving us the ABC pattern. Okay, so you can see what happened right here. Price pushed a little bit below, beyond the 5th move, then gave us the ABC pattern, which is usually a retracement. So we have this first push, which stands for your A. You can call this your B. These two candles are close below, and then you have your C. So most times at the end of the wave, when price wants to retrace or change direction, it will always give you A, B, C. Okay, so that's just how the Elliott wave system works. Okay, so you can have more than 5 waves in the same direction, whether uptrend or downtrend, but the 5 waves are the ones that are assured. Okay, you are assured of 5 waves. We've seen uptrends that go beyond 5 waves. It could even have up to 8 waves. But what you are assured of in a solid and LD trend is 5 waves. That's what the Elliott wave is trying to make us understand. So when you get to the charts, you will be looking out for where the trend currently is. If it's around the 3rd wave, you know you're still going to have 4th wave, which is a correction, and the 5th wave, which is going to push. That's if the trend is LD. Okay, so basically that's what I have for you in this particular video. If you got any value, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.